Bob Iger, the day after the earnings call, goes on CNBC with David Faber, and David Faber has some tough questions. Let's talk about that on That Park Place. Hello, and welcome to That Park Place. I am Jonas J. Campbell, an investigative reporter for That Park Place. I am here with my Wookiee co-pilot, Vash Sky, and my great and wonderful opponent, WDW Pro, or maybe he's my collaborator. Welcome, guys. Are you ready? Are you ready to get onto Squawk Box?
Absolutely.
And see what Bob Iger and David Faber, they will be locked in a little rhetorical battle here as David Faber tries to get as much out of Bob Iger as he can. And Bob Iger tries very hard to say, no, oh, shucks, was there an earnings call yesterday? I don't even know. I was just on my porch sipping some lemonade, maybe smoking a cigarette. I didn't even realize I was in a fight these last 3 months.
Jonas, I would just recommend to folks out there, Bob Iger is known as someone that you can watch his facial reactions, you can watch his body posture, pay close attention during the interview, and see, is he comfortable, is he uncomfortable? It's going to be interesting to watch.
Yes, let's get right into that.
Emerging victorious from a slugfest of a proxy fight.
A Pyrrhic victory.
You won by substantial margins. But I do wonder, Bob, 31% of shareholders did say they would like to have Peltz on the board. Do you listen in any way differently to that shareholder base? Does it make you think about the things you've done any differently? All right, you won big, but 31% still said, hey, you know what? We'd prefer to have this guy on the board.
Well, this whole process gave the board and some members of management an opportunity to engage with many shareholders, perhaps on an even deeper level, and have a good, candid dialogue where we had an opportunity to describe to shareholders what our priorities are and what our various processes are, including succession. And we had an opportunity to listen to them and hear what was on their minds as well. So I think if anything came of this that's positive is that it did, in fact, increase the engagement that we've had with shareholders.
Always back to increased engagement.
Yeah, I mean,
they reduced engagement. They didn't have questions
over these last few weeks.
That's a good point.
Yeah,
and the time to come here, but
make no mistake, though. I know because you mentioned the 30% a few times. This was decisive in terms of
it was not.
Shareholders voted. I think
he only got 20% last time.
Endorsement of the board and management and the direction we're taking this great company.
Stock went up. The first time he had a proxy fight, the stock went up. Then it came down when Peltz went away. It went up again during this process. He seems to believe in part that he's helpful in terms of getting you guys to focus. And or there would be those who say, well, an activist is helpful in getting management to focus. And actually it has a good effect on the stock price. How do you react to that argument?
Well, first, let's talk about the stock price. The stock is up over 40% since the beginning of October.
Had to reduce that, didn't he?
A slight bump when he announced his interest in basically the second proxy fight. And then actually the stock drifted down after that. And then it went up when we announced our November earnings.
Yeah, I mean,
he then mentioned a slate and named a slate. It drifted up slightly and then went down again. And then we had our February earnings, which were sensational, and it went up significantly. The market is reacting to how this company is performing. It was not reacting really to the activist fight.
Right.
Except that it's the exact same curve that they had last time, which dropped off after Peltz left.
Even more
Absolutely.
I feel great about right now today is put the victory aside, that I can, spend all of my time with the management team and the board on executing against those priorities because they're really important.
Many times and have in other campaigns as well. It is an enormous distraction potentially for management. It takes a lot of time. I assume that was the case for you as well.
It did take a lot of time. I continue to spend a lot of time on those priorities. You have to still, watch the films and engage with our businesses on what their strategy.
How many times do you watch the films, Bob?
Especially when you watch them 5 times, it takes a lot of time away from that.
But
you and I have talked about this in the past at this very spot, I think. There's no love lost between the two of you. Was it a personal kind of contest in some way beyond just a proxy?
He's going to say it's just Ike.
On my side, no. Meaning
exactly.
Boom.
That's a lie.
The interest
of
the company, not my personal interests.
Oh shucks! I never hate anybody.
The company and the board was doing, as opposed to defending myself against criticism from Nelson and the people who are backing him.
I do not believe any of
If you're
this.
asking whether it was personal on their side,
Ridiculous.
you probably should ask him. He probably would say no. I think there probably was, to some extent, a degree of, I'll call it, personal animus that was on the table here. But I didn't.
Fired him. I mean, he didn't like that.
Well, we closed the Marvel offices, and it did result in Ike leaving the company. But I'm not going to put words in his mouth at all. I had my my opinions about it all, but we were defending the company against the criticism of
No,
Mr. Peltz in this
This
case.
has been very focused. It has been a defense of Bob Iger.
I actually tried not to
Absolutely.
consider it a personal attack on me. I didn't think that was really of great benefit.
Despite the fact that they
You're a
did
very
many
competitive
personal
person,
attacks on
you wanted
Peltz
to
and
crush them,
Rasulo.
didn't you?
Correct. And it's interesting how he took it
I wouldn't
personally.
put it that way. If you're asking me whether I wanted the company to prevail, yes, because I knew exactly what was important to the company. I knew what we were doing, and I was extremely confident. I remained confident and very optimistic about what we're doing.
Right.
And I just didn't think it was necessary
To disagree with Bob.
Yep.
Essentially bring Nelson Peltz.
They spent
onto the board,
$70
nor the
million
board
to do this.
No,
by the
no,
way.
I have to.
He
I'll
didn't
clarify
bring
that
in new
later.
ideas, and end up being more destructive than productive.
Well, I'm curious on that because there had been speculation that were he to have won a seat on the board, you might have accelerated your own departure from the company. Is that true?
Well, he didn't win a seat on the board, and I am back to where I was before all this happened.
He almost said it.
100%
I'm back.
of my time on this
Yep.
company, and I'll just leave it at that. It's
But
important.
it was
for-
instructive, though, to
it's
think
important-
about how you were thinking about things. Finally, on succession, which ended up being it did, especially towards the end, the real focus here, and ISS made it a focus of their decision to recommend Peltz for the board. Had you changed your approach at all? You mentioned the 7 meetings. I'm just curious, is the process been accelerated in any way? What updates can you give us beyond the fact that you're focused on it?
Well, the board engaged in a succession process the moment I came back, and they are taking it very, very seriously. I don't think it has changed because of the activism battle at all. They established this as their number one priority from the moment I came back. They formed a committee right away. They've been meeting regularly. They're going to meet even more regularly going forward because I'm not going to be here forever. And
Maybe
another 2.5 years.
well, but I think it's really important to name the right person at the right time and to create a transition process that is healthy.
How long do you see that transition process?
Ooh.
I can't say.
I mean, is it a year? Is it,
Not determined.
Okay.
But I think it's really important to have a good transition.
It's going to be
process.
Dana Walden,
You know,
guys.
this is a big,
Yep.
complicated
Absolutely.
and not only is it important to choose the right person, but it's really important to give that.
And it's a
person
political choice, by the way.
in the world
Absolutely.
to be successful in the job. And the board's very focused on who the person is, when the decision should be made, and essentially how the handover of sorts will take place.
How does the failure to have done a successful transition last time inform your own actions this time?
Well, look, the transition the last time around could not have happened at a worse moment for the company.
It was a moment that Bob Iger picked, and the person was picked by Bob Iger.
100%.
I think one of the things that I don't think has been as understood as it should have been over these last few years is what happened to this company during that period of time. Probably suffered more than most companies in the world.
While
given the
Bob
fact
Iger
that
was executive
people were not
chairman.
going to the movies. People were not going to theme
It
parks.
exploded the
Live
streaming
sports were not
business in a
occurring.
way that
And
could have never been
just as
replicated any other
important,
time.
production wasn't
This is
going on. There
nuts.
were no movies or television shows being produced. This company was hit very, very hard. And it handed my successor
A
set
$200
of
stock
challenges
price.
that were enormous in nature, and hopefully that will not be the case the next time around. I don't think that there's much more I can add in terms of the process itself. or
Please
the
ask him
transition.
why his
Obviously,
predecessor had the highest
we
stock
all
price in the history of
learn
the company.
from
Please ask it.
the past, and we're eager for this process to be successful, not just in the choice of my successor, but ultimately how that person
Right.
takes
I guess,
over.
when you say you've learned from the past, is there anything you can share in particular
No,
about the decision making?
not really.
It's not like you hadn't spent a lot of time with him, like we talked about. I mean, you spent a lot of time with him.
Yeah, I think, look, that was now it's 2024. That was implemented 4 years ago.
Yep.
I said
Please
that we've learned
ignore
from
my
it.
mistakes.
We're focused on
Yes.
the past at this point. I think that's also really important. It's not you can't do anything about what happened. You just have to make sure it doesn't happen again.
Now he wants to
Talk
get out
about
of
the
there.
future now, because as we
Yeah, you
always
can tell
do.
the body language.
Let's talk about streaming. Continue the long conversation we've had. I remember, I think, in fact, when you first introduced it, we did our interview.
2017. No, 17.
Again, taking credit for this.
$6.99, I remember that.
Can't
A
blame
long
Shapeback
time
if
ago.
he's taking credit.
The price point was a long time ago too, but you've been talking about it becoming a growth business. You haven't really given specifics on what your expectations are on margins, but I am curious at this point now. You mentioned some positive things a month ago at a Morgan Stanley conference. What can you tell us in terms of how things are shaping
That's a
up
Peltz talking point.
for the direct-to-consumer business, which is such an important component of investors' view of the company?
It is. Maybe I can provide a little bit more specificity. First of all, we've done really well in terms of streaming, in the sense that
Not specific.
we launched Disney Plus only in 2019, so it's just over 4 years
Excuse.
ago. In a very, very short period of time, we find ourselves second to Netflix in terms of global
No, you are
subscribers.
not.
Pure streaming
False.
business. We know that we ended up losing a lot of money on that, more so than we expected initially. Part of that was because we were chasing sub growth and not as focused as we needed to be on the bottom
Bob
line.
Iger's call.
I came back. The losses were around $4 billion a year. It was clear that was not sustainable.
He was only gone for 11
not
months.
Acceptable. And the goal was, first, let's reduce those losses. And as we've said, we're going to be profitable in our fiscal fourth quarter this year. We lost, I think, 130 some odd million dollars in the last quarter. That's a huge, huge improvement. And
Because you
know
cut all
exactly
content.
how we delivered that improvement. Now what we have to do is turn it not just into a profitable business, into a growth business, a business that has margins that this company and our shareholders would really
Double-digit
be
margins.
proud of.
Only way he's going to do that is by
Eventually, yes, double-digit
green lighting
margins,
that
of course.
content again.
The way to do that is actually very, very clear to us.
Hulu.
It's very, very clear that we need more engagement in terms of consumers spending time on the platform. We just launched.
This is that thing we talked about Disney Prime a long time ago.
On
Guaranteed.
Disney Plus that came out of beta last Friday, actually.
Right.
And I can tell you that it is doing extremely well. We'll have more to say about that in our next.
The intention
earnings
is
call.
to put Disney
But
on
we
top
feel
of
great
Hulu and
about
hope
the
that people get
engagement of those
confused.
Disney subs who are not getting Hulu, who are now watching more programs that were on Hulu, including Shogun.
Because they weren't watching Disney programming.
So we have to increase engagement. We need the technological tools to lower churn, create more stickiness. It's things like recommendation engines, getting to know our customers better. We need to reduce the cost of marketing. We need to reduce the cost of customer acquisition to get the margins up, obviously. I think we have to program more smartly, particularly outside the United States, which is to pick the markets where we could really move the needle and program with really strong local programming. We've had some success.
Disney
there.
has more
We need
content
more
overseas
success.
and
Password
less
sharing is
profitability.
something
Right.
else. In June, we'll be launching our first real foray into password sharing.
You will.
Just a few countries and a few markets, but then it will grow significantly with a full rollout in September.
That's the newest
Cracking down
information
on
right there.
password sharing.
Yes,
essentially.
Yep.
and all of that, obviously, all the things that I mentioned are components of what will turn this business into.
Sounds like they
a
pushed it
business
back,
that we
too.
Well, you
feel
sound like
really
you're
good about.
describing what Netflix already is. I mean, do you ever get to a point where you can actually have margins that Netflix has?
Well, I think it would be a little premature for me to say yes to that. It would certainly be great.
That's a no
if we
for
could.
now.
We aim, as I said, for this business to be a growth business for the company with margins that our shareholders will feel good about. We know how to run businesses well, high margin businesses. Parks and Resorts, a great example of that, as a for instance.
Ouch.
The only example.
Confident that we're on the right path, but we still have a lot of
You
executing.
want to
do.
clearly be the clear number 2, though, to Netflix.
Oh,
And I mean, you already are. You probably don't even like to hear me say
no, they're
number
not
two,
either. Amazon
but
Prime is
that's
way
what you
ahead
are.
of Disney.
And that would be
Way
a bad
ahead of
place to
Disney.
be.
That would be fine, but I think I wouldn't say that's necessarily the goal. But I look, Netflix is the gold standard in streaming. They've done a phenomenal job in a lot of different.
According to their own
directions.
filings, they
I
hate Netflix, but
actually
they
have
want to be
very,
them.
Very high regard for what they've accomplished. It would, if we can only accomplish what they've accomplished, that would be great.
I guess when I mentioned
What the good news here is we know what we have to do. And look, we start with a
No, you
very
don't.
strong hand. Obviously, we've talked about it for years, but Pixar and Marvel and Lucasfilm and Disney and
All
the
of those
array
studios are
content
doing
that we
very
have, the
badly right
acquisition
now.
of 20 when ESPN ultimately is launched as what we call a flagship product, which is basically the full suite of ESPN services, there will be a great opportunity for a bundle of ESPN with Disney Plus and Hulu.
It's cable.
And a
It's
bundle
cable
that is very
3.0 actually.
consumer-friendly, meaning part of.
Understood. But do you ever see a day when there could be a bundle, not of, but of competitors in a sense, but to make it easier for the consumer in the same way that you are bundling sports?
Go on, say cable.
Warner Brothers.
That's
Discovery
cable.
And Fox.
Yes, I think there are possibilities there. Sure.
You do. On the
Absolutely.
sports JV, where do we stand right now in terms of, I know there's an antitrust question.
Yeah.
You have a new CEO for it. Price hasn't been announced yet, right?
No, we have an idea, but we're proceeding as though this is going to clear basically government scrutiny. You mentioned we hired a CEO. They're iterating in terms of what the experience will look like and feel like. And I don't know that we've announced a date yet. I just can't.
Talked about the fall.
I think that's right. We have no more specifics on that.
Yeah.
We feel good about it. We think it's actually a sports fan's delight in terms of being able to watch all those sports
Talking
in one
points.
place.
And do you think
It's very
there's
pro-consumer?
any antitrust issues that are being raised by potential competitors?
Well, we know that some are raising the issues.
Yes.
We're
He
proceeding.
said
we're
pro-consumer.
proceeding as
He
though
said
we prevail.
antitrust. Those are opposite concepts.
Price?
Correct.
We have a sense there.
Too soon. Yes, I do. I have
You
a
do.
sense.
30 to
Mid-40s?
50.
Where
Not
do we
going to
think?
say.
Yep.
Not going to say.
At least.
No, it's too soon.
You keep
Has
bringing
to
up ESPN flagship, and I do wonder, and again, I know you're not going to talk price, but why have that anymore? If I, as a sports consumer, have access to this joint venture, and let's say I'm paying $45, why am I going to spend another $30 on an ESPN over-the-top product?
He just said he knows the price.
What that is for the
Well,
consumer.
first of all, we haven't gotten specific about how the pricing will work. I think you have to assume that if someone is already buying the joint venture product,
right, they're not going to have to
that
pay.
will be taken into account if someone wants to buy so-called flagship. What we're trying to do is basically serve sports fans in multiple ways. If sports fans who are not part of current multi-channel bundles already,
Cable.
or were and basically canceled their subscriptions, that's certainly one way to serve them.
Do you have a name for this JV yet?
No. If you've got any ideas, please.
Probably Hulu's. I believe Hulu Sports is the one that's being
But you see them
batted
being
around.
able to exist both, because
We call
talked
it
so often
Spulu.
about when you would take ESPN eventually over the top, and I still do find myself wondering, well, with the existence of this product, does it make it less of a need?
Look, ESPN over the top again is going to have multiple features to it. There'll be fantasy sports. There'll be the opportunity to bet on sports basically right off the app. There'll be significantly more, I'll call it consumer engagement,
That's
interaction,
gross.
interactive.
Will kids have
capabilities.
access
So
to
it's
that
not
app?
The same thing. And again, what ESPN is trying to do is serve the sports fan in multiple ways.
Are you still looking for an investor for ESPN? I mean, that was something we discussed at Sun Valley this summer.
We're
the
looking-
NFL Network, is that still out there? Or is
We're
that,
looking for strategic partners. We don't need an investor.
sorry, strategic partner.
Yeah, and
Is that still happening?
We've had ongoing discussions.
You think?
Nothing more to add.
No, but
He
it feels like it's gone
intentionally
on for a
said that
while.
that
Is
way.
You think
Well, it's
there's really a
complicated.
To
chance
needle him.
something could happen?
I don't want to predict. We're engaged in conversations. We think if we can reach the right agreement with the right partner, that it's a really worthy thing to do.
I want to move on to some other
Probably
news.
means the
because we're
NFL thing is gone.
Short on time. You've
That's what it
settled
sounds
up
like.
with Florida.
Ooh.
Is that over and done with? Are you happy with the new arrangement there?
Great question.
It's still a federal case, so over and done, not completely. There's still
The free speech
It's
case?
done.
case.
They agreed to
we
delay
view
briefing
what we
on
did
it.
there is really, I mentioned on our annual meeting call the other day. I guess it was just yesterday.
Yeah.
I
Feels like
guess.
it was a month ago. That we called it a
Hard to
good
say
thing.
when it's
Good
pre-recorded.
thing for the state of Florida and a good thing for the Walt Disney Company. We settled the matter on a state level, and this gives us an opportunity to engage, more effectively and more deeply with the oversight board, which has also been reconstituted to some extent. and make the kind of investments that we need to make in that business, not only to grow our business, but to grow in terms of the state of Florida.
Just don't say DeSantis won.
More revenue for the state of Florida. It's a good thing that we did.
It is. And so we can expect no more hostilities between Governor DeSantis and the company.
There we go.
Well, I would hope not, but I can't speak for Governor DeSantis.
You just mentioned the federal case. So.
Speaking of hostilities, I mean, I know you are aware of Elon Musk and what he's been continues to say, or at least post on his X platform.
Oh, look at the face.
That? Somebody who's got such a big microphone as Musk kind of coming after you all the time.
I ignore it.
You do?
Yeah. It's just there's no relevance to the Walt Disney Company.
He doesn't ignore it. That face says he doesn't ignore it.
Absolutely.
Buy shares. Peltz was on the board, and
Next subject.
He comes after you as being because he's on his anti-woke campaign.
People have been coming after me and the company for years, and it's just
no, they weren't. Not before 2019.
Absolutely.
I mean, you've said to me that you would love to be just out of the culture wars. Do you feel like you're succeeding in that?
Well, I think. Yes, I mean,
no.
I think the noise has sort of quieted down.
What?
I've been preaching this for a long time at the company before I left, and since I came back, that our number one goal is to entertain. I think, look, the term woke is thrown around rather liberally. No pun intended in that regard.
Oh, no, that's a Freudian.
I think a lot of people don't even understand really what it means.
Scratch of the eye says, "Whoops-a-daisy."
Infusing messaging as a sort of a number one priority in our films and TV shows is not what we're up to. They need to be entertaining. And look, where the Disney company can have a positive impact on the world, whether it's fostering acceptance,
goes back right to that.
People of all different types, great. But generally speaking, we need to be an entertainment first company.
The fact that he had to say really that is a failure on his part.
I have.
You still going to be able to? You good for the next 2.5 years?
Yes. Look, this is a great job.
It doesn't seem like it's been that great a job lately.
It's still a great job. And I don't lose sight of that. It's a great company, a great job. We have a lot to do. I'm excited about a lot of what we're doing.
He's not getting another interview.
We're going to accomplish all the things that we've talked about and more.
You have that confidence at this point.
I do.
Everything. I mean, again, we're still waiting on a lot of the things for you to deliver on. Some you already have in terms of buybacks and dividend increases and the like.
Yes, absolutely. Just look at the bottom line, delivering more than $8 billion in free cash flow this fiscal year, almost double what we delivered last year. You mentioned the dividend,
and yet somehow lower earnings per share.
Investing the right amount of money in the right businesses, like our experiences business, which has had tremendous returns on invested capital. Friday night, ESPN had a doubleheader women's college basketball game. The game one, which is Iowa versus LSU.
This is not a great talking point, Bob.
Highest rated college basketball game ever on ESPN, men's or women's. That game rated higher than every game of the World Series. 4, I think, of the games of the NBA Finals, the Golden Globes. I could go on and on. They're very, very. That to me,
beating the Golden Globes is not a good metric, Bob.
Yes,
and as a business.
Although it's not nearly the contributor it was to the company years ago.
ESPN still has.
I know it's profitable.
ESPN is still highly profitable. Their ratings have been up the last couple of years. Their operating income has been up the last couple of years. We're engaged in basically positioning ESPN well for its future, but it starts basically with a great foundation. Create the universe that's going to live next to Fortnite, make sure that's successful. And if it is, and hopefully it will be, then look to see where we can invest further beyond that.
Bob, we're out of time.
Did he just say he wants to buy Epic?
Nice to see you, David.
Nice to see you as well, and thank you for having us.
Pleasure.
Bob Iger, the CEO of Disney. Carl, back to you.
I think that was a lot of fluff.
Lots of fluff. Not much in the way that was new. However, that I think we got a little more clarification on password sharing. Apparently, they're going to be slow rolling that out in a few territories or markets, and then go wide. I think he said September, which is a little bit later than we initially thought.
Yes, I agree with that. So the things, as far as that is concerned, for those of you watching this video who don't have the context on Disney Plus's recent subscriber numbers, they went down by 1.3 million in the previous quarter. Subscriber numbers will go up, but that is because of an agreement specifically with Charter Spectrum, where they decided to bundle Disney Plus with Charter Spectrum. So essentially, cable subscribers getting Disney Plus for free. So if it's more than 7 million subscribers in one quarter, then they are more successful than than that deal. I don't see that happening. Whenever Comcast, who is the actual largest cable provider in the United States, does that similar deal, and there's no reason that Brian Roberts from Comcast doesn't force Bob Iger's feet to the fire with that one, there'll be another boost. So Disney is essentially going to be cannibalizing their linear profits, that's cable, in order to subsidize Disney Plus with ads, because they want to make that into an ads tier in the same way that Hulu has been successful with an ads tier, because Hulu right now is twice has twice the revenue. I don't want to say it's twice as profitable, because Disney Plus is not profitable as of yet. Hulu has twice the revenue of Disney Plus and is actually profitable. So,
right, and the wholesale or the bundled with Charter ARPU, or average revenue per users, a much different calculation than the retail ARPU.
Right.
So,
and we don't know if that additional third is going to raise that Hulu subscriber ARPU or not.
Yeah.
Once they purchase that part of the company, they'll only have to make $8 billion at least, if not $16 billion off of that additional third in order to make that worthwhile. Pro, did you catch anything interesting in there?
Oh, so much. It's clear that Bob Iger is terrified of Elon Musk. It is clear that he is licking his wounds from DeSantis. It is clear that he knows that Nelson Peltz could be back the next year, and so he's being very careful about what he says. I also thought it was interesting. I very much wish that the question had come up about the change in language, because we have been guided for years now that Disney Plus on its own would be profitable. That means make a single penny in profit, more than they spend, by the fourth quarter of 2024. Not to say that it would be profitable overall, just that in a single quarter they can make a penny more than they spend. And yesterday that language changed, and that language changed because it switched to all of Disney's streaming services combined,
specifically combined DTC.
Yep.
Right. So if you spend, so Disney still has to finish buying Hulu. So if Disney spends, let's say, $8 to $12 billion in the next 2 quarters, and Hulu, based off that $8 to $12 billion, helps them make a single penny in profit when you combine all their streaming services together in the fourth quarter, I don't think that's what shareholders were thinking that was going to mean. And so there needs to be more attention brought to that, I think, if we're going to get actual objective truth brought to the company. I would also suggest that I've been paying close attention to the stock, and despite the S&P 500, folks, no financial advice here, despite the S&P 500 being up during this time significantly during the interview alone, the Disney company lagging behind the S&P 500 average, and even at points while Iger was speaking, the stock was dropping. So overall, Disney stock a little bit up as we get started off this interview, but the overall market, right, so the tide that should be lifting all boats, is accelerating beyond Disney. That's not a good sign, especially after they dropped in the shareholder meeting yesterday. Final point I would make, yesterday's shareholder meeting was a farce. I don't say that because I dislike Disney. I say that because the shareholders meeting has gone from what Vash had said before to these, from these live events to now it is all pre-recorded, pre-scripted, has AI voices, AI callers and all of this. And Bob Iger in this interview said, he referred to those statements. He said, a few days, I guess yesterday. And when he made that slip, that indicated to me the entire thing was recorded and made sure that it was as manicured as possible. That's the sign of an unconfident, scared CEO. We'll see how this goes over the next year. They spent every single drop of gasoline in the tank of the Disney vehicle to stop Nelson Peltz. For all the talk they've said now, they have to capitalize on all these big headlines that they've made to try to stop Peltz. And if they cannot deliver, it is going to be a very painful year for Disney.
I hate to say I have no faith in this company at this point. I've yet to see the signs that they're trying to point to. They say that ESPN is being positioned for profitability, even if they are profitable from this point forward. I wonder how much of that is specifically from sports betting, and I do have a question there about whether or not ESPN will be incorporating betting into the ESPN app, what is the age restriction on that app going to be? And they are trying to make ESPN into a kids brand as well with these. They put it forward in the shareholders meeting. ESPN Toy Story Sunday Fun Day Football or whatever that was. They're using Disney characters to sell the ESPN brand, but they're going to keep them out of the ESPN app. This is a sticky area that also reminds me, of course, of the fact that Marvel's next movie and Disney's pretty much best chance at getting $1 billion at the box office is not a film that is appropriate for kids in any way. It's going to be, if it's like the other Deadpool films, not just an R, but a hard R. So this is I'll say yes, it is a transformative time at the Disney company, and not the kind of transformation that I think Walt would approve of.
Question, Jonas. If some rapscallion out there, and we would never suggest you do this, please don't, but if they pirate Deadpool as a hard R, does that make it a hard R?
Yarg.
Bad jokes of the day, folks.
Yes, we do need to wrap this up, though. The last thing I want to point out is just how uncomfortable Bob Iger looked when Elon Musk came up. He was dismissive of Peltz, but methinks Bob does protest too much when he says, "Oh, I ignore it. I ignore it." He was waiting to say, "I ignore it." He was bristling. He was frustrated. I think you'll see that face coming up in many YouTube thumbnails over the next year. That's how bad of a face it was.
It might be because Bob Iger can anticipate next April he might be facing Elon Musk for the next battle.
Yes, sir.
That's a good point.
All right. Well, we have talked long enough here. I just want to say thank you so much to those of you who stuck with us on this long analysis. We don't usually do something this raw on the channel. We usually like to save that for live streams, but we wanted to get it to you as soon as possible. Of course, like this video if you enjoy this video, as Feyoda wants me to say, but like this video if you like this video. Leave us a comment. Did you find anything interesting that we missed? We didn't get to cover it all, of course. And consider subscribing to That Park Place for all the news that should be fun.
Thanks for watching That Park Place News. For more information, consider checking out www.thatparkplace.com. And don't forget to subscribe, share, like, and send this out on your favorite social media accounts.